Hi, welcome back. I'm Naren, and in this video, we will discuss about the asset allocation. So, why we need asset allocation? So, when you have some money, so the question is where you will invest the money and which asset classes you want to invest. Whether you want to invest in FD, real estate, stocks, gold, and also how much you want to invest in each of these asset classes and how long you want to invest in each of them. And what is the goal of investing in these assets? So, the goal one is to grow wealth, and how much risk you want to take in growing that wealth. So, that also can be answered with your asset allocation. And the goal two is how you can protect the wealth through the asset allocation. So, these are some of the reasons why you need asset allocation while investing. And about the goal two that we saw about protecting your wealth. Why you need to do that? Because future is unknown. Like in general, like you don't say much about the economy, it can go down. The stock market can crash, and if you invest in real estate, it may fall down, and even the interest rate might fluctuate a lot. So those are some of the general reasons why you need asset allocation to have some protection from them, and also the specific reasons like, let's say, the banks where you have put your money shuts down, or even the mutual fund that you have invested, kind of they freeze those funds. Or let's say you invest in real estate and you end up with some legal issues. So I feel that the main reason should be to protect your wealth. You should have asset allocation. At least you should be aware of that and try to implement that, again based on your needs. So with asset allocation, you can try to protect your wealth in bad financial weather. And also you can aim for the overall health of your diversified assets. If one asset is not doing well, the rest can kind of have a better returns, so that overall you will be in a good state. And also with asset allocation, you just want to maximize your wealth growth in almost all conditions. It's more like increasing the probability of the failures overall. And also, yeah, like this is related to the goal one, like where you will have some financial goals and you want to grow your wealth with based on your risk appetite. You can distribute accordingly and try for maximum growth, but maybe with less probability because of uncertainty about the future. And asset allocation is also like related to how much risk you want to take and the rewards that you might get based on those risks, again with different probability and the investment horizon that you're targeting. And what are some of the asset classes that you can explore? So first you need to get familiar with most of these asset classes. Like one common thing is the fixed income, which includes your regular savings account, fixed deposits, employment, the employee provident fund, the public provident fund, even NPS, some annuity pension policies, RBI savings bonds, or government or corporate bonds, like the recent Bharat bond ETFs. and also the gold, like related to that, gold ETF or even sovereign gold bonds. And gold, you can use it to hedge against inflation. Also, when equities is not doing so well, gold can at least counter that. And in equities, like the regular public stocks or the startups, which are private ones, and even mutual funds or unit linked insurance policies. Also, investing in insurances like life, medical insurance, and annuities, which are the pension policies, and investing in real estate, and the cash or the equivalent which you need for your expenses, regular expenses, that is liquid fund. And in all these asset classes and different types and all, you should be aware of the tax implications. Like some of them might have tax benefits. So based on that, you need to even think about the returns across these asset classes. And also you should be aware of some of the safe options which you can use it to the maximum, like the employee provident fund, the public provident fund, senior citizen savings scheme if it applies to you, the FDs, recurring deposits, RBI bonds, post office savings scheme, NSC, Sukanya Samriddhi Yojana, Kisan Vikas Patra, and sovereign gold bonds, or the pension policies, the annuity, NPS. Even though NPS is related to the market fluctuation. So, one of the thumb rule while allocating to the equities is maximum that you need to invest in equities is 100 minus your age, so that as you move towards your retirement, you will decrease the allocation in the equities, so that you will have less risk. So at least my take is move towards the 30% max allocation to the equities, and have some in gold like 5 to 7% as an hedge. And if you pick sovereign gold bonds, you can even get 2.5% interest per year, apart from its value growth. And in fixed income class, we can try to have some 6 months expenditure in savings or short term FDs, so that we can use it for the regular expenditure. And you can also think about buying annuity, which is a pension policy provided by various insurance companies, and even nowadays banks also provide that. So only annuity can provide you a fixed income for a long horizon, which is beyond the FDs. Like FD can give you only 5-year max period, but annuity can give you for life term. So here you should not think about the maximum that you can get, because whenever you want to try to buy an annuity, normally it will be less than the current FD interest rates, because they are committing for your lifetime. So you should assume for the worst in future and have some fixed things for your lifetime. You can also try to increase the voluntary PF contribution. And for FDs, you can try to have multiple FDs, and also try to have different a timeline for each FD, so that like having 1 year, 2 year, 3 years kind of averages out the fluctuations in the interest rate. Also, we can try to have FDs in multiple banks, so that the worst case scenario, if one of the bank closes down, you won't lose all of your money. And also, when you are going to buy an annuity, you can also try to use the similar logic, not to put everything in the same bank. Like if you have FDs in a bank, you can try an annuity from another entity, like say LIC, which is different from your bank, so that you can minimize the failure of the institutions, and also which can survive for long, like for your life duration. And also, when you're investing in equities, you can try to diversify it across sectors, sizes, mutual funds. So this is again thinking about the allocation in each of the asset class. So your primary goal should be with the asset allocation, the protection of the investments that you have made, and also maximizing the returns with minimum risk. So don't generally go by the masses, and don't just chase the success stories. Like don't put everything in one famous mutual fund, assuming that you will get the maximum returns, because there may be a smaller probability to make that, but there will be a higher probability that you might lose most of it. And with asset classes, we should try to decrease the probability of the failure, and we should have the patience for the long term. Thanks for watching. If you find this useful, please like, subscribe, and share. And good luck with your location.